Hello everyone and welcome to this live stream. I haven't recorded in a very long time, and if you have watched previous videos you will notice that I was focusing on algorithmic trading using MQ5. Since then, of course, a lot has changed, and now in the era of AI, MQL5 maybe is not so prevalent. So I will be looking to switch that strategy and trying to employ helps of the applications which are currently available to analyze data and code new solutions. In the meantime, I'm still being an active trader, and I thought that maybe we could just share the progress and the daily struggles of my trades, and also journal it for myself so that I can maybe come back to it and see what I have done throughout the day. As a word of explanation, we are right now already in the trading session, 43 minutes into the trading session on the 13th of March, 12th of March. And the setups that I use are sequential. The first order of the day is looking somewhere around 8 a.m. Looking at the current price and seeing how far away are we from VWAP. I'm using XTB, which is a broker prevalent, I guess, in Eastern, Middle Europe, Central and Eastern Europe. But what is important is that they have a VWAP indicator and a volume indicator, which is an actual volume, not a number of clicks, an artificially generated volume, but an actual number of orders and contracts being exchanged. That is quite important. You can see this here maybe, that it is a real volume down, and you can actually see this, and maybe, there you go. You can see that the description here is a real volume. I am trading on my account here. This is a real account, real money, although I'm trading on the smallest possible size. Just to figure out what kind of strategy I would be interested in coding first. So far, the strategy I'm testing is one where we're looking at that 8 a.m. level of price for DAX index of 40 biggest companies in Germany and etc. market. And usually the bet is that in a normal market, whatever you see around that time, if you're far away from the VWAP, there's a good chance that price will return to VWAP and return to the level where it's at around 8 a.m. Of course, that doesn't always come true. And even today, I didn't bet on it because you could see these wild upswings and wild movements in the market naturally related to the war in Iran and the movement of oil price. The DAX seems to be very heavily influenced right now by oil. So we will be looking to be more careful today. The second setup is around the opening. We have the typical opening range break. I am using a 5-minute chart. That 5-minute chart tells me when to enter and when to exit, given the appropriate momentum. Today I was playing around a little bit because I saw a very large opening candle which retraced, so that was a rejection. We also have a gap in the open, and that gap tells you that we need to be careful around maybe trying to close the gap. So on the one hand, on the other hand, of course, if oil price goes up, then the market is poised to go down. Right now, the oil seems to be rebounding slightly. It is interesting that the oil opened with a big gap up, and I think this was related to an extension of the movement from the previous days because of the release based on the news from Donald Trump that the war will be over soon, based on the release of reserves by various countries. That downward movement seemed to me too soon and artificial. And that scenario seems to be realizing right now. I was expecting we would still close the gap in here and then go back. But if the market reverses earlier, that's even a stronger indication that the oil supply is in peril and people are worried about it. So we do have here in the market what seems to be like a bear flag, sorry, a bull flag, but it's just too long right now. Normally, what I would do is I would trade essentially with the momentum. So if we have a break above the opening 5-minute bar, I would immediately enter. And if we go below, I would immediately exit. I would immediately enter to the downside, with the stop loss being around 60 points. The reason being is I noticed that usually over 50 points. Usually the retracements are about 50 points. It seems to be a standard stop loss for traders. So there we go. I just liquidated. Yeah. So that means that you would have more or less a chance to have a reasonable stop loss, but that also means that the market usually goes around 50 points to the opposite when it reverses. Now, what's happening is that the DAX is going above the 5 opening range, so I am entering, regardless of what I feel about this movement, I will always enter. I have also opened a VIX position because whenever it goes above 20, I would sell short with a minimum position, so I am able to withstand even the largest movement up, and I would add successively the higher it goes. But today I liquidated my position because it's a rolling day, and a rolling day means that you're gonna have a pretty big swap around half a pip, which is quite a lot. And of course the downside, so that's not favorable. Once we go above this price, I would normally set the take profit somewhere around 100 points from the original entry. That will be my first trade. If the momentum maintains, I will be looking to add to the position, but using a strict risk management of the position. Question now is whether oil will rebound or whether it's going to go back down. And it seems to be edging lower. I will catch this moment. This is probably a bad trade. I already see that because it's probably a liquidity grab, but on the off chance it isn't, I want to benefit, and I do still expect that bounce back to close the gap somewhere around here. So it's a good risk to reward ratio. Whenever it goes above this level here, of this bull flag, I will immediately jump out, realizing that it is simply a bull flag and a liquidity grab. That's my hedge. This is where I'm saying the oil prices will go down, the market should go up. If the oil prices go up, I expect the market to reverse as well. Then I'll be stopped out of my position. We'll see what happens there. I'm also looking at the price of gold, which is behaving very weirdly recently, but the price of gold has become a bit of a speculative instrument. It's no longer a safe haven, in my opinion. And the rally we've seen so far is just too huge to sustain, and it's just nothing like in history. So whether some markets and some groups of people knew that the wars were coming, and I'm talking plural wars, or it's just simply people have joined in on the trade and wanted to realize and get a piece of the action, as you call it. In any case, there's just too much money in gold right now, and I expect that the gold will fall soon, although I don't know when. So I'm staying out of this trade for now. We'll see when things start to be rapidly worsen. I will then be around to take advantage of it. So far for the day, I've taken a couple of trades. One unsuccessful oil short, one profitable DAX buy, which was really against my normal strategy. This was, put this here in perspective. This was here. As you can see, this was a trade taken at 8.35. I noticed that the DAX is going up sharply, VIX was falling, and the oil price was falling from the open. So I figured we're probably gonna go for a gap closure, which it seems like we did. But I did close early. I set the stop loss for about 100 points, 95 points. And then the market reversed. When I went short in this place, this was the opening of the market. Unfortunately, those shorts were not realized because the market just doesn't move enough in my direction. I could have taken profit around 50-point mark, but I'm no longer doing that. I'm focusing on 200 points or 100 points or more. And we're seeing that the oil is indeed reversing and the DAX is also reversing. So we'll probably be stopped out of both positions right now. Regardless, we keep the trade. The trade is for 58 points. The stop loss is here around half of the opening bar. Whatever happens in here, I'm not interested. I would only be looking at the level below, which is good. What is it? A good 100 points below. Right now, the rejection candle is quite strong, but we'll see what happens. The second volley of trades that I would normally fire is price dependent. I will be looking for a breakout into one of the directions, either up or down. And then I would be looking for a comeback to the opening area. The reason for this is I recognize that a lot of traders employ the breakout strategy. And the moment the price goes in their favor for about, like, let's say 20, 30 pips, they would move their stop loss into break-even position. And I have been stopped out countless of times like this. So what I would do is I would try to add to the trade when the market price comes back to the opening position. However, in this case, I'm not so sure because of this nasty rejection candle. So it was very, very visible and very prominent shooting star. Looking at the 15-minute, and this is a high Kanashi, so it smoothens out your ups and downs. I would say that this is a rather bullish picture, but the wicks up top here are worrying. On a daily chart, it's a clear chopping movement, but it, to me, looked like it bounced off this here support area, which has acted as support a couple times previously, although it has also been punctured a couple of times. Indeed, also very recently, but now it seems to have held, and if this really holds, we could see the move up all the way into the 24,200 levels. This is what I expect might happen. And so the price is returning to the opening. I will see if we can get maybe a slightly better price here. And this is the only time during the trading where I allow myself to have two open positions with both not being secured by a break-even stop loss position. Normally, when adding to the trade, I would only add by securing all other positions to break even, so that if I lose and the market reverses, I lose 1 unit of risk, which is around 60 points, not more than that. Let's see if this goes any further. Has almost touched the opening price. I would normally take it. Just a little bit preoccupied about the shooting star. And let's see how this candle closes. We still have 1.5 minutes. I'm also observing live news on the internet to see if there's any major news. And as I mentioned, price is moving up. I will not be adding. I would like to see. The problem I have is because of this shooting star here and the fact that we have effectively almost closed the gap. I'm a little bit worried about the reversal here. I'm gonna be more careful today. But if the price goes up, we're looking to take profit around 100 points from here. In the meantime, assuming that the trend goes on, we would be looking to wait for it to go somewhere into the half of the profit and then reverse. At that point, I would be willing to add to the position, but then I have to secure the original position by a break-even stop loss. Of course, with large retracements, what you add is the risk that you just effectively worsen your price, because you can be entering the trade with a higher price when it's a buy. Then you get taken out of your original position, and then it goes back, but you have just moved your stop loss up and your price up, so you haven't gained anything, but you have lost position. But on the off chance, of course, that it goes further up, you can scale quite good, and then it is possible to make good profit. It is often that I lose a couple of trades in a row, but one good trade would make up for all that. And we're seeing that the oil is rebounding, and we're going to get stopped out of this trade here momentarily, which means that the DAX is also bound to reverse, which it did. The VIX index, which I would normally be short right now, is not behaving, but the VIX is based on S&P 500, and this is not a trading moment for S&P yet. And my gut feeling was right. We're going to get stopped out of both positions probably. If we don't, I am able to add. Now, if I add below the original price, I would only add with a stop loss of the original stop loss. So no more than that. Let's take the chance. So my stop loss is now 20 pips. I have added to the position, slightly lower than the original entry, which on the other hand improves my entry point overall. But of course, the risk is that I get stopped out in both positions and then the loss is increased. Which is about to happen. So now we have to be a little bit patient. If the trade gets stopped out, I reset my breakout trade to the opening of the high of the opening bar. And I would then also be looking at the counter. So I only allow myself to get stopped out 3 times in this breakout trade, for whichever direction. So if it goes up and down and stops me 3 times, I am done. I need to step back and return to the market when there's a clear structure and see if we have a trending day or a ranging day. Usually, if this happens, you may assume a ranging day. Then you would be looking to get one trade far away from the VWAP and then come back to see if you can maybe get some redemption towards the end of the day. It is important, however, to accept that there will be losing days, of course. This is interesting because the oil seems to be going up and it will break out to the upwards, but DAX is also rebounding. I will now secure my original position, I mean the second add-on, which is lower by a break-even trade. So the original position is still where it was, and we only have 1 unit of risk left. If I get stopped out of this, that's fine. Nothing happens, which I expect should happen. And I expect the oil to go up right now. That candle is an engulfing candle, so it will pop right back up. The volume on oil is rather lower than yesterday. But this is a tick volume, so it seems I need to remove it from here. Just realized this doesn't matter. We have just received the report that 2 oil tankers have been hit in Iraq waters. We have been stopped out of the add-on. So just a fraction. So we're now more or less 1 unit risk down on the day. and I count that towards the counter here. So we have 2 attempts left. Breakout. If we don't, then we stop. As a word of explanation, I intend this stream to be more of a journal, and I will therefore stop streaming whenever there's not much happening. Usually I actively trade for about an hour after the opening. Then I move on to other activities and just monitor the market. But I will try to enter the stream whenever I take any trading decisions on the day, so that it's clear why I have made those decisions, and also will allow me to maybe limit the trades I get into. It seems like we're going to be stopped out of all positions right now. I do not count the oil trade into my number of breakouts here. This is a side trade. So the moment we get stopped here, I will reset the buy stop at the original position with a 60-point stop loss. And that will be here, but I'm not placing it yet as I haven't been stopped out. That oil is hanging on. Yeah, it's gonna get there. We could maybe cut the loss right now, but if it reverses and I cut the loss, I would be really upset with myself. So for psychological reasons, I would rather it reach the stop loss in full, especially that it's quite tight. Uh, And there we go. We are about to be stopped out of all our positions. I already placed a trade here for a reset. Not a very good start. But let's try something more. Let's see if we can get it at a lower price. Since we are now, what, 20 pips away from the stop loss, I'll try to buy again. This is a new candle. Let's go below the previous one. There we go. Buying now. And setting the stop loss here equal to the trade at the original position. The VWAP is turning down, so that's not good for us. That means that the volume weighted price is dropping, and that seems like a liquidity grab, and then move downwards possibly. But the oil has dropped again, so I might be considering to cut the loss here from oil. But again, it's psychology, so we are looking at the Qatar's Prime Minister's statement right now. This is not super important, it seems. We are trying to rebound here. doesn't look very good. The liquidity is dropping, the volume is dropping. So we might be in for a rough day. No clear trend and a loss. But we have to stick to our strategy. That strategy is clear. We hope for trending days. And we give it chances. The chances are there. And there we go. If it goes all the way here, I would say it's a strong, especially in this momentum, it's a strong possibility that we will be falling down quite hardly. And you can see that we have almost closed the gap. And of the rise across the VWAP, I would expect it to fall further down. In this case, if we'll then reverse, we could go all the way here, or even break this major support zone here, which is quite strong. But it's slipping, as you can see. It has been attacked once, twice. Now it has been punctured here. We will probably reach the daily 500 moving average that is coinciding with this gap at open here, more or less. These are the level that I would expect that the market would drop at maximum over the coming days, of course, not at one day, but over the coming days. Were it to drop massively, it could reach somewhere halfway, but I only expect this support level here. Let's see what happens. I'm resetting my buy trade on the off chance that the market was just looking for liquidity and will go back up. And it's a 60-point stop loss. Somehow my oil trade is still alive. But it's going to get knocked out right now. And this is interesting here, the wicks here, and the VWAP. Could we have a bounce off of VWAP? Looks to me like it's gonna be a sell-off. But let's see. I'll keep streaming, but I'll stop my camera. No reason for you to just look at me. If anyone watches that in the future. Maybe in the moment I'm also in a Bitcoin trade. I don't normally trade Bitcoin, but it is interesting to see what's going to happen. It has been consolidating here for a while, and it looks like it is defending pretty well against this chaos here. Bitcoin is anything but safe haven asset, but it does have an interesting level right now, major support. So it could be that we might go back up. That presents an opportunity. The position, of course, is minimal, but nonetheless. So far, the VWAP is holding. Al Jazeera is showing yet another repeat of the shoot down of the top of the mine laying boats. Some of them look like one person's boat. I'm not sure how they were supposed to lay mines, but that's okay. Anything for a good show, right? And we are bouncing off our VWAP. One thing I have noticed is that the candles between, let's say after the first minute, between 2 and 3 minutes on the 5 minutes, are the most deceptive ones. So I try to avoid entering trades in the middle of the candle. I'd rather see what the candle does. But of course, sometimes by the time the candle closes, it's already out of the levels I'm interested in. And then I have to chase or let go of a trade, which is never fun. Hmm. Yeah, what's happening. I will stop my stream here, and if anything happens, I'll come back. Okay, just as I've switched off my camera, my oil position was finally stopped out. So we are now not happy with the oil trade, but the oil is moving up. It means that the VIX is probably going up. It is slightly. And I expect the DAX now to break through the VWAP and continue downwards. There we go. And at that point, barring any unexpected liquidity grabs, I would say we're poised for a move upward. On oil and of course downwards on DAX. So we have entered a sell. Now let's see if it's going to be a wash and rinse or if we actually go down. We have news on the US market. We have unemployment claims today at 1:30 local time, CET. It of course means that we would be looking at a pre-open data. So it would be worthwhile to join for that time. The unemployment in US has is under scrutiny because of the job non-farm payrolls recently, which were very, very bad. It's instead of seeing a positive job creation dynamic, we have seen a negative one and a quite strong. So that, of course, is a bad signal for the economy. The DAX is now trading towards the low of the open range on that shape. Um, Signals some weakness, I would say. But then again, if you hang around here for too long, it's not good for the bears either. Proverbial bears move quickly. If we are to see a sell-off, it should be quick. So far, um, it's going back towards the VWAP. Hmm. Let me guess. Oil has reversed. Not by much. No, Heikanashi is looking like it might reverse. This to me looks like a reversal pattern. If it holds, it's a 15-minute chart here. Bear in mind, so it could just as well go up. We'll see. Ooh, this is not looking good for our shorts. In fact, we're gonna get stopped out very soon. This is gonna be a second stop out. Might be a short trading day. Not a very good opening uh, of the stream, but it is what it is. We have to take that as well. Yeah, that was a one. This is gonna be a two. Um, the breakout towards the up or the down will be the third one after we get stopped out. In this case, if that fails as well, we stop the trading for the day. And this is this is a rule I really need to be very, very steadfast on, because all the major losses I have suffered were obviously these um, trading frenzy days where I was trying to catch up and trading nonstop and having a lot of positions open. There we go. They're stopped out. So I reset my sell stop. Oh, it's a bad price action. No, then it's um and these days where you just try to make up, of course, make up for losses is terrible, and it naturally impedes your judgment, or at least mine. Um, I go on a tilt, and then the losses are huge, even with a small sizing of the positions. So it is important to just keep a cool head and just step away from it, saying, okay, this market does something I don't want to be engaged in. I don't expect it to hang around here forever, but I have seen days where it does. And if you don't stop at some point, the losses might be very, very big. Or it might be there's going to be a head and shoulders position, in which case I'll be entering a buy and I'm going to get stopped out soon. I would rather not, but yeah, it is a possibility. the point where I might consider entering short in here. Having a super tight stop loss. That's a little ridiculous. We'll give it back here. A 20-point stop loss, which is 1/3 of my normal stop loss. And see if that is quite a big momentum though. Quite a big momentum. And the view up projection is interesting. If it were to go up, we have moved to the 24,200 as I mentioned earlier. This would be a possible move, but with the oil disruption happening and time playing against us, I don't see people being super optimistic. The trading signals for DAX that I observe right now is a buy after a bounce from a resistance level. So that would be against us. This move has continued for some time now. We'll see. The liquidity is dropping. So if the liquidity drops further, it means that the prices are going to become erratic, and it's not going to be that much opportunities for entering. And there is a higher chance of range bound date as well. Let's see how this close is. We're about to enter a short. There we go. That's going to be a short one as well. A short. That's a pretty hard move here. With the liquidity still around 1,000. So make or break. There we go. So we have entered a long. So we're in a hedged position right now. But our short has a super short stop loss, which might get popped in a moment now. The buy is our second buy, so it's the last position. I will no longer go short in this case. Oil has reversed slightly, but I don't see it. I have gotten out of the short, so that means that I'll be stopped out of the buy rather soon, unless the oil really reverses here. Energy stock is up. You can see Chevron, ExxonMobil, Coconut Phillips, Occidental Petroleum, all having gains today. Yeah. It's a choppy market. So that tells me, however, this kind of price action here is it's a distribution phase, right? This here is someone is selling the stock after the super optimism that has sold off again. Maybe I would be interested in one more short. Somehow I'm bearish today. Although looking at the daily chart, 1 hour chart. Yeah, 1 hour chart is bullish actually, if it holds. It would be actually quite bullish here. And the 4 hour chart is going to be looking quite enticing. But we know that this is not technical, right? This is now fundamental driven. If oil is going up or down, if there's major disruptions in the oil trade again, we can see Iran's capacity to fire missiles at the trade, at the tankers. And then technicals will not play any major role in here. All right, let it play out. We'll see what happens. VIX standing still. Standing still. I will stop the stream for now.